Hello, everyone. My name is Christabel Ojok, and I am the co-founder and CEO of Rensco. And I'm thrilled to welcome you to this special educational mini-series of affordable home loans. Today, we're honored to have Stella Mutai, Head of Mortgages at HFC, joining us to unpack everything you need to know about affordable home loans. Stella brings years of expertise in mortgage financing, making her one of the best voices to demystify this critical area for aspiring homeowners. Now, in today's episode, we'll delve into the world of affordable home loans, what they are, who they are for, and how they're opening doors to home ownership across Kenya. Our goal is to break down the process, eliminate confusion, and empower more Kenyans to become homeowners. Whether you're looking to buy your first home or just curious about the options available, you'll gain valuable insights and actionable guidance to take that next step. So tune in and don't forget to catch the full conversation on YouTube as we bring home ownership closer to reality for more people. So thank you, Stella, for joining us. You can introduce yourself to our guests.
Thank you, Christabel, for having me here today. My name is Stella Mutai, head of mortgage business at HFC. Glad to be here and to having this conversation on affordable homes, a topic that I'm very passionate with. Anything touching on real estate.
Okay, thank you. So we'll just delve into the questions that we prepared today. So most of these questions emanate from the frequently asked questions that we received from our clients. Now, the first one is, could you explain what affordable home loans are and how they came about?
Thank you, Christabel, for that good question. And I'll set the perspective of where we started.
Okay.
So, affordable housing program came about in 2017 with the previous government, and it was a part of the Big Four agenda. So, since it was part of the Big Four agenda, that's when now it was rolled out to the market. And with that, we've been able to see quite a number of developments coming up from that agenda, whereby the same time Kenya Mortgage Refinance Company was born. So you see, from 2017 to where we are in 2024, there's some great milestones that have been made in the property space or in the affordable housing space. So when you're talking about affordable housing program, you also see even the current government has been able to adopt the affordable housing program as one of the strategic pillars. And we can also be able to see, it's picking traction, whereby we're seeing more people are acquiring homes for own occupation, as well as also investors are getting in big time, because we've been able to see properties below 10 million coming into the market.
Yes.
So when you ask what is an affordable housing loan, basically it's a loan whereby one is able to borrow under single digits, and this has been enabled by Kenya Mortgage Refinance Company. I know we're going to be talking more about that, but it has been enabled by Kenya Mortgage Refinance Company, and one can be able to borrow from a financial institution like HFC at a single digit of below 10%.
Okay. Thank you for that. Then the next one would be, what drove HFC to become a shareholder at KMRC? So we know KMRC has a number of primary mortgage lenders as shareholders. And so what drove HFC to become a shareholder, as well as enter into the affordable housing finance space?
At HFC, HFC is part of HF Group.
Okay.
And HF Group is a company that was founded in 1965. It was founded in 1965 with the main aim of supporting the indigenous Kenyans to be able to own homes, either through a mortgage. And actually, at that time, most people were owning homes through mortgages. So with that in mind, when the affordable housing program came about, HFC was the first, HFC was the first bank to be able to roll out the affordable housing product. And it was one of the first financial institutions to be able to put in capital in Kenya Mortgage Refinance Company, because with the genesis of where HFC was coming in, we believed that it was an opportune time for us to be able to support people or our customers to be able to own homes, noting of one also of our purpose. Our purpose is enriching lives. And so since our purpose is enriching lives, we thought it's important to be able to support customers to be able to acquire homes through the single-digit facilities. So that's why we became the first or the founding members of Kenya Mortgage Refinance Company.
Okay.
Yeah.
Now, as a follow-on to that, if you could kindly break it down for the audience to understand how HFC's affordable housing, what it covers.
Well, from having looked at how affordable housing program came about, HFC was able to, the team at HFC, we were able to come up with a proposition that captures the market. And this proposition is whereby now we're able to support customers at a single digit to be able to borrow, to acquire homes, or even to be able to construct. And actually under affordable housing program, we have several propositions whereby you can be able to buy already constructed units. You can also be able to buy and build, whereby you buy a piece of land and simultaneously construct. And also you can be able to construct. You've already have that piece of land and you don't know what to do with it. You can be able to acquire a house. You can be able to build a house by borrowing from HFC at a single digit. So with that, then you find that we have favorable terms, and one of the terms is that whereby you're able to finance customers up to a term of 20 years at a rate of 9.5%, which is on a reducing balance and charged on per annum basis.
Okay.
Yeah.
So what I'm hearing is somebody can be able to get the affordable home loan to purchase a ready-built house, or if they have a piece of land somewhere and they want to construct, then they can also approach HFC and they can get financing for that as well.
Absolutely. Okay. And the reason why it is that is because you know very well, Christabel, Kenyans, we like owning properties.
Yes.
And so we thought somebody could be having an idle land somewhere. This could be the opportune time to be able to improve on that property. And the way to improve on that property is walking into any HFC bank or branch, and we'll be able to support you on the home ownership.
Okay.
Yeah.
Okay. Now, looking at the eligibility criteria, so how does that look like for both people who are employed and entrepreneurs? Because we have a mixed audience.
So, Christabel, you'll note that in the current, the operating environment that you're operating in, it's very dynamic and income streams are changing.
Yes.
People are getting into the creative industry whereby we are getting people not on the income streams that you are used to, the employed income streams that you are used to. We have young people who are writing for people outside the country and they're earning income.
Yes.
So for that, when we are lending to our customers, we look at two critical things, the income and the property. And the question you've asked is on the income. So we look at, is this income consistent and reliable? Can we be able to bank on this income? If yes, then we'll be able to support you as a customer to be able to buy a house or to be able to develop your property. So you don't have to be having the normal, to be on an employed. You don't have to be employed for you to be able to come to HFC to be able to borrow. You can be self-employed as long as you've got consistent and reliable income.
Okay.
And even though the income is on M-Pesa statements, noting that now I've mentioned about the creative industry, your income is paid via PayPal, then we are able to support you. We are able to support you.
Yes, yeah. Yes. And I'm glad you've mentioned that because we do have a lot of people, like you've mentioned, young people are now more creative. And we have a lot of them who are working within the gig economy.
Exactly.
So most of them, let's say, for example, if they're on Upwork or any of those Fiverr, all those platforms, then ideally they tend to get paid through either PayPal or M-Pesa or whichever other platform. So it's not your traditional salary slip.
Absolutely.
Yeah.
It's not the normal bank statements that you'll be getting.
Yes.
So for us, that's why we had to be able to come out to be creative on that part.
Okay.
Yeah.
Okay. Then is there a price cap in terms of, so let's say if somebody wants to buy a property, is there a price cap in terms of is there a maximum amount if they are keen on getting started? Yeah.
All right. I'll say yes. And the reason why I'm saying yes, Christabel, is because at KMRC, through KMRC, we're able to support our customers up to a loan amount of 10.5 million. So noting that we're supposed to support you as a customer at up to 10.5 million, we work backwards and ask ourselves, for us to be able to support you at 10.5, what should be the value of the property, or what should be the selling price? Because we land on the selling price or the selling price or the value of the property, whichever is lower. So for that matter, you'll note that the property value or price should not exceed 12 million.
Okay.
Yeah,
Okay.
should not exceed 12 million. So if it should not exceed 12 million, that now becomes our limit of how far we can be able to go, or can be able to support our customers under the affordable housing proposition.
Okay.
Yeah.
And ideally, that does make sense, because if you look at somebody who's buying or building their very first property, more often than not, especially for the majority, it's not going to be a property that's really, expensive in the 20s and 30s of million. It may happen for, a few, but for the majority, that 12 million does make sense because it includes a wider scope of people.
Absolutely. And if I can be able to comment is, you see, the affordable housing program came up to be able to support people to own decent homes.
Yes.
Yeah.
Yes.
Either from it could be your first home. You're coming from the university, or are you able to own that 1 bedroom, and then you can be able to graduate to the next property. Yeah. So affordable housing checks in to be able to support anybody. Yeah.
Okay. Now, we've touched on the fixed interest rates, where you've mentioned, so the financing would be provided at 9.5%.
Yeah.
However, sometimes it's not always clear in terms of what is a fixed interest rate. So could you please break down that for us?
Right. So in the markets, we have 2 different types of interest rates. So we have the fixed interest rates as well as the variable interest rates. And I'll start off with the variable interest rate. The variable interest rate is the one that changes according to the changing macro environment. And also you find that also your repayment graduates, or they keep on changing. In the initial years, you find that with the reducing balance interest rates, the initial years, you find that you're paying more of the principal, less, you're paying more of the interest, less of the principal. And then towards the end, when you're about to finish up or paying up your mortgage, you find that you're paying more of the principal, less of the interest. So that is on a reducing balance. Well, we also have now the fixed interest rate, or the fixed interest rate is where now the rate is fixed for the term or the facility. Yeah. And if it's fixed for the term of the facility, it ensures that you're able to plan yourself depending on your sources of incomes. And so what I know you can be able to ask in build up for that question, and I know maybe we'll come to it, is that if, for instance, you take the 2 rates, can someone be able to pay their mortgage early? The good thing is that there's no penalty for putting in lump sum amount of money or for paying your mortgage earlier. And sometimes it becomes a plus if you're able to pay ahead of your time. It helps. And it helps you to be able to move to the next property.
Yes. That tends to also come up a lot, simply because I think generally as a society, people tend to shy away from anything that is, debt oriented. So any form of extra income that you get, you want to, allocate that towards clearing the facility. So what would be one of the, let's say, very innovative ways in terms of if somebody is keen on clearing the facility faster? So we've had instances whereby somebody has asked, okay, if I have, let's say, an extra 100,000 or 200,000, and I go to the financier, so do they pay on the principal? Do they just put a lump sum in there? Like, how should they go about it?
All right. I think what I'll be able to do is to answer with an example. So for instance, you borrow a loan of 7 million today, and maybe you've paid for the first maybe 1 year. You find maybe your loan will be either 6.5 approximately there. That's come down to maybe 6.5. So, and you get this lump sum amount of money, say 100,000. It could be 200,000. Now that you're talking about the gig economy and the creative industry, you find that you've got an extra amount of 100,000. 100,000. So once you get that 100,000, you can be able to come into the bank and deposit to your account and be able to instruct the bank that you want to reduce your capital balance, or you want to reduce your principal, or you
Okay.
want to reduce your loan balance.
Yes.
Let me just use the loan balance.
Okay.
You want to be able to reduce your mortgage mortgage balance. And so once you're able to do that, then you find that the loan that was at 6.5, then it's able to come down. If you deposit 100,000, it comes down automatically to 6.4. So for that, then you know that the repayment now, you can easily ask the bank to recalculate your monthly repayment on the 6.4, or you can still be able to advise the bank, let me maintain my repayment at either the 7 million I borrowed, so as I can be able to fast track my mortgage repayment.
Okay.
Yeah.
Okay. So both options would be available.
Both options would be available, and that's why it's always critical to always have conversations with your relationship manager. And what we do is at HFC, we always assign our customers have relationship managers whom they need to be able to be talking to often and can be able to guide on these strategies.
Okay.
Yeah.
Okay. Now, when it comes to, so somebody's watching and then they've consumed the information, they're like, okay, let's say like somebody's who's working within the gig economy. So they've identified a property that they like. Then now the next question would be, how long is that application process going to take? So in this case, to put it into context, we could choose to, let's say, for example, deal with a property that's complete. How long would that journey take them?
That's a very good question, Christabel. And I know it ranges, but I'll just talk with the normal process. The normal process takes approximately 90 days.
Okay.
Yeah. From the time you get in that property to the time you're moving in to the property. And that's within the normal sale agreement period. The normal sale agreement period is 90 days. And noting that the normal sale agreement period is 90 days, then you'll note that a property transaction can be completed within that time. But due to factors that are beyond us, sometimes you find that the transaction can take a longer time. So the normal process is whereby you've already found that property, or if you haven't found the property, you can come into Rent-Score. Rent-Score will be able to support you to get that property. And once you get that property, then at HFC, then you put in your mortgage application, depending on your source of income. So you could be employed, you could be self-employed. So you put in your income documents as well as the property documents. The property documents are the normal sale agreement and the copy of the title. So once you put in the application, like at HFC, the application, we should be able to approve in between 3 to 5 days. And the reason why it's in between 3 to 5 days, it's because we've been able to understand our customers need feedback like yesterday. And so we've been able to work on our processes in the back end to ensure that we're supporting our customers to move pretty fast. So within those 3 to 5 days, a loan is approved. And then once the loan is approved, you get an offer letter. So from the offer letter from the bank, then you progress the next stage whereby you're supposed to accept the offer letter and return the offer letter to the bank. We give the normal period of 30 days, but we always tell our customers, for us to be able to fast track this transaction, why don't you return the offer letter earlier, even within maybe even 7 days, or even as long as you're comfortable signing the offer letter, because that's a contract in between the bank and the customer. Then once the customer accepts the offer letter, we move to the valuation. Valuation is carried out by valuers. We have a panel of valuers who carry out the valuation of the property. And the reason why the valuation is done is to ensure that we are checking on the value of the property. What's the correct value of the property? The location. Is this property on a riparian land? Is this property on a road reserve? Is this property in a place whereby maybe it's there's so many factors that the valuers look at, and we always guide our valuers on what they need to look at. And even for them, since they're in the practice, they know what is expected and what to look out for. And for this is to ensure that we're protecting their customers, to ensure that they're buying the right property. So from the valuation now, we go to the next process. And let me say valuation takes approximately 4 days.
Oh, wow. Okay.
Yeah. And some 4 days to the maximum. These are four working days.
Yes.
Then from once the valuation comes into the bank, we're able now to send the instructions to the lawyers. I may say this is where it takes the longest time. Out of the 90 days, it takes approximately 45 to 60 days. Reason being, the lawyers need to be able to prepare the charge document.
Okay.
A charge document is now the property that now shows that this property will be held by the bank for a specific period of time. Say maybe like at HFC, we're financing you for 20 years. We're able to say that this property will be charged to HFC for 20 years. Or if you've chosen a shorter term of like 10 years, you say this property will be charged to the bank for 10 years. So the lawyers are able to prepare the charge document. The customer executes the charge document as well. So the charge documents are executed in the bank. And once now they are executed, the bank now we go to the next process of registration of the property. So the property will be registered into the customer's name, as well as in any document, may it be a copy of may it be the title, may it be the lease, may it be a section of title. It's going to be indicated that the property is owned by Christabel, but the property will be charged to HFC. So that shows now the joint ownership. And until the customer finalizes paying the loan amount, that's when the property is discharged. So once you are done with the charging and the registration, then the next step is the registration. And now the customer, once the registration is done, the disbursement is done. The disbursement is done to the vendor or the person selling in the property. And once that is being completed, then the customer is able to move into the house. So the ideal days is probably 90 days, and actually should be 90 days. And I know with Sasa, we are working to be able to get into that. And I'm hoping one day, one time, we can even get to 90 days. There are some jurisdictions in other continents, or even in Africa, they're able to register properties within a week or 2 weeks. And I hope in Kenya, you can be able to get into those levels, and we ensure that the money circulates in the market or in the economy. The longer we take in the registration process, six months, 9 months, or 1 year, the money is not circulating in the economy. We need this money to be able to circulate to the economy.
Okay. Yeah. So I've had a couple of things. So the first one is there's the element of also the bank does the due diligence.
Absolutely.
So at the tail end of that, it means that even the client, the customer, has a certain level of surety that yes, they've done their own due diligence, but also the bank has, there's a layer to it.
Exactly.
Okay.
We always encourage our customers to always even have your own lawyer to be able to lawyer or valuer to be able to conduct a due diligence even before you come into the bank, and this gives you the comfort. However, at the bank, we are able to do a further due diligence to be able through our valuers and our lawyers to be able to confirm if there are any incidents or if there are any encumbrances on the property. Encumbrances is whereby if there's somebody who could be owning a secondary right to this property, there could be a caution, all those things. Our lawyers and valuers are able to check that, but we still encourage customers kindly they just have your lawyer and this gives you the confidence that the property it's clean.
True. Yeah. Then the second thing is the property will be registered under your name because you're the person who's purchased it, but then the bank will register a charge which pretty much indicates the interest that they have on that as a result of the financing that they've extended to you.
Exactly. That's so what happens is that now in your title deed, or if it's a freehold property, or if it's a lease, on that lease, or even it's a section of titles, now we are moving to section of titles.
Yes.
You find that it's going to be written Christabel or Stella Mutai, but charged to HFC.
Yes.
Yeah.
Okay. Yeah. Okay. And so in addition to that, there's the element of once that process is complete, then you get possession of the unit, then you get to move in. And I believe at that point is when you start making your monthly repayments. Is that correct?
That's true. So you start making your repayment once the mortgage has been disbursed. And the normal time is that there's always that notice of 1 month. You see, under CBK regulations, we as financial institutions are supposed to give a customer a 1 month notice. And for that, we always give our customers a 1 month notice. So for instance, if the money is disbursed today on 25th or whatever date on 30th or the end of the month, so your repayment, the next your repayment will be due on 30th of the following month.
Okay, and there's a notice. Oh, that's really good.
And always, like at HFC, we always advise customers
Yes.
Through emails, SMSs, as well even a call. The relationship manager will be able to call you and advise you, Christabel, your loan has been disbursed and your next repayment is expected to come in on these dates.
Okay.
Yeah.
Okay.
So for you to prepare yourself, and we always remember when you come into the bank, we always advise you on the entire incidental costs, including the mortgage, the expected mortgage repayment. So even for you, you're able to have in mind that my monthly repayment is expected to check in on this date, and so if it's expected to check on this date, then I need to be able to prepare.
Okay.
Yeah.
Okay. So how we look at it at Rensco, because the information is that you're able to now convert your rent and then you build equity over time. So in this particular case, now the bank becomes your landlord. And the other question would be, so you've mentioned that you'd ideally issue a notice to the client that, okay, your facility has been disbursed and now you'll start making your monthly repayments, let's say from the next month. So is this usually in advance or will it be in arrears, or it doesn't, it's just as long as it's the next month, then you'll now keep up with that particular date?
Exactly. So what happens is that the customer needs now to be able to keep up on that on that repayment.
Okay.
So if, for instance, and I like this aspect whereby at Rensco you're matching the rent with a mortgage repayment, which is a good idea, and that's why now affordable housing came in. Affordable housing program, and then the banks or like HFC developed a product on affordable housing, such that if you're paying a rent of say 30,000, 40,000, you can be able to take something that suits you.
Yeah.
And one thing I can be able to say, Christabel, is that you'd rather pay a mortgage than pay rent. And the reason being is when you're paying rent, sometimes I know it's an income stream to somebody, but you find that at the end of it all, this property is not yours.
Yes.
However, when you're paying a mortgage, at the end of it all, this property will be yours.
Yes.
And you can be able to work towards paying that mortgage earlier and be able to graduate to the next and the next property.
Yes.
Yeah.
I completely agree. So now let's get into the meat of it. What happens if somebody loses their source of income during that period? So like I've you're watching this, you've listened, and you decide, okay, fine, now I'm ready to get started. You've gone on a platform, you've been matched make, you've gone to HFC, we've paired you with HFC, you've accessed the facility, then things are going well, right? So 2-3 years down the line, 5 years down the line, you lose your source of income. It could be as a result of many things, which we'll delve deeper into. So one of them could be a scenario whereby you've been retrenched. Another scenario could be as a result of maybe you're not just a good employee and unfortunately you got fired, right? Or another one could be a scenario whereby you voluntarily, ideally that shouldn't be the case, especially when you have such obligations and you don't have like an additional source of income. But then we've seen it happen, scenarios whereby somebody decides to just leave work and quit. So what take us through those scenarios? What would happen?
Thanks, Christabel. In regarding what happens in case I lose my source of income? And you'll note that one of the incidental costs that a customer pays is the mortgage insurance, or what you call life insurance.
Okay.
So we always encourage our customers to take life insurance. And why do we encourage our customers to take life insurance? It's because of uncertainties of life, and some of the uncertainties, loss of income. So since that, well, it's only God who knows about tomorrow. We encourage them customers to take the life insurance. And now with the life insurance, now we also go further and encourage our customers, if you're employed or whatever source of income that you have, why don't you take a rider on this insurance? And on this life insurance, and the rider is in between for 6 to 9 months and cushions you in case of loss of income. And you find that from the normal life insurance premiums that you're paying, if you take a rider, the difference is very negligible. And so since it's very negligible, I would encourage someone watching today is, can they consider taking up life insurance as well as a retrenchment cover? And this will cushion you in case of uncertainties.
Okay.
Yeah.
Would that be sort of like a bigger dent in terms of how much they'd have to pay like on a monthly basis, the additional one? Or is it an amount that, let's say, so would we be looking like 5,000, 10,000? I know it's different depending on the facility, but in this case, let's put it into context. Let's say we're looking at 8 million. Somebody has accessed a facility of 8 million as an example. Would you...
So what I'm going to say is that this insurance cover, the retrenchment cover, is usually in between 6 to 9 months.
Okay.
And so since it's in between a period of 6 to 9 months, you could be making your insurance or your premiums are based on your age.
Okay.
The younger you are, the lower the premiums. The older you are, the higher the premiums. So that's why we always encourage our customers, the best time to buy a property is now, not tomorrow, because if you wait for tomorrow, some of the costs will check in will be higher.
Okay.
Yeah. So, but going back to that, to your question on what percentage, or is it going to have a dent in my pocket? I said not at all. The difference is very negligible on the life insurance. I may say it's less than 0.01%.
Okay.
Yeah.
Okay.
Yeah.
So in that case, somebody has been... So before I even get to this question, is the life insurance, would that be voluntary or is it compulsory? So which type of insurance is compulsory that comes with the facility? And then which other one is now like voluntary, where you can be like, okay, I want to just take an extra cushion to, protect myself?
All right. So for any customer taking in a mortgage, there are two insurances that are compulsory.
Okay.
One is the domestic. The reason for domestic, it covers the property.
Okay.
Yeah, in case of floods, in case of breakdown, all that, it will be covered. In case of fire, domestic insurance checks in.
Okay.
Yeah. And then there's a life insurance. The life insurance now covers you as Christabel in case of death or incapacitation, or in case of any uncertainty. Mostly is death or incapacitation. Incapacitation that you are not able to work, you are not able to get that source of income.
Okay.
We encourage our customers, and actually those are like compulsory insurances that you need to be, as long as you take a mortgage at HFC, we're able to arrange that through our HFBI. We have a bank assurance that we support our customers at concessional prices, or the premiums at concessional. However, there are other that are voluntary, like the retrenchment cover. Yeah, you see, this is now it's an addition that maybe in case of loss of income, either I take it or not, but we still encourage our customers, you can take this. Because you've seen what has been happening with the markets, with COVID, with even the operating environment that we are in. We still encourage our customers. It's very critical to take those covers: the life insurance, the domestic, and the retrenchment cover.
Okay.
Yeah.
Okay. Then the next one would be, what would be some of the consequences? Let's say, for example, if somebody misses their repayment. So this month, I've been consistent with my payments. And then now something just happens, or, life gets in the way of things, and I miss 1 monthly repayment or 2 monthly repayments. So what would be the consequences of that?
Well, I may say,
not that we're encouraging it.
We're not encouraging it, but it will happen.
Yes.
And let me say, it will not, it might happen. And if it happens, it's always imperative to visit the bank. Always have the bank or your relationship manager close to you, and you're able to advise them, I might be able to miss this month's repayment. And for that, if you're able to miss this month's repayment, it's just you advise the relationship officer or manager that I'll be able to catch up with my repayment within this period. If not that, the moment whereby you find that maybe you've missed your repayment, like the first repayment, second repayment, or third repayment, you find that auction is not our last, it's our last resort. Okay. We always encourage our customers, now that you're talking to us, you can consider other options. You can consider rescheduling your monthly repayments. You can consider restructuring your facility. You can consider even selling your property on private treaty, other than going through the auction process. So our business as HFC, it's not to auction customers' property, but we always encourage customers, in case of you feel that you're behind repayments, let's have that conversation, and we'll have solutions for you.
Okay.
As a bank, we are there to be able to support our customers to owning properties and to ensure that at the tail end, still this property remains yours.
And Stella, I'm glad you've said that, simply because most customers usually have this notion that the bank is after my property. They just want to take my property, So I'm glad that you've, demystified that, and that would be the last resort, simply because you have an option of actually sitting down with your RM and having that discussion and say, hey, this is where I'm at, So if one of the remedies could be restructuring, then that is an option on the table. Then you've also talked about the essence of selling through a private treaty. So they're actually options.
There are options. And actually, I think even there are more than 5 options that we can be able to sit with a customer before we get into auction.
Okay.
So it's important even to anyone watching this, in case you fall back or behind your repayment, don't shy away from talking to your financier.
Okay.
Yeah.
Okay. And auction is the last
resort.
Last resort.
Yeah.
Okay. Okay.
And we don't want to go there.
Yes.
And that's why sometimes you tell you, Christabel, why don't you sell this property such that you're able to recoup some of the appreciation that has come on from this property? Yeah, maybe you could be saying your loan balance is 5 million and this property has appreciated up to 10 million. Why don't you sell this property at 10 million? You pay off your loan at 5 million and you get a difference of 5 million.
Yes.
That you can be able to kickstart you to something else.
Yes.
Yeah.
Yes. Yeah. Completely agree. Okay. Then, so when it comes to financing, again, so when you talk about the affordable home loans, sometimes people are like, okay, is that a mortgage? No, if it's a mortgage, I don't want. So there's a lot of stigma still centered around mortgages. And we've also seen scenarios whereby some customers prefer to go and just borrow a facility at a higher interest rate altogether in comparison to what is currently available at 9.5%. So my question is, what would you say are the key advantages or benefits of now affordable home loans compared to just any other loans in the market?
Excellent. Affordable housing loans or affordable housing mortgages, they are there to be able to support customers to be able to own that home. So one of the advantages with the affordable housing or any mortgage is the long term. You find that mortgages, they range in between 15 to 20 years. Like for HFC, it ranges up to 20 years.
Okay.
So for this, you see, you're able to stretch your repayment up to 20 years. And you have an option of paying earlier without penalty. You see,
Yes.
that's a plus.
Okay.
You can take 20 years to be able to accommodate according to your source of income,
Okay.
or according to how you feel that I can be able to stretch myself up to maybe 20 years. I can take 15 years, I can take 10 years, or even 5 years if you think that your income is able to support for those 5 years. But you still encourage, why don't you take 20 years and pay within a shorter time? So the advantage of the affordable housing mortgages is, one is the term, and generally for mortgages, the loans are mortgage loans. They have a longer term, but also there's a single digit interest rates of below 10%. And also we also have this option, the properties under affordable housing, they're below 10 million.
Yes.
So this is something that is affordable and someone can be able to get into homeownership.
Okay.
Yeah.
I was just smiling because even as you mentioned and you talked about, like, somebody can consider, stretching their payments all the way up to 20 years. So again, with customers, they usually like 20, that's a very long period of time. They feel like they're going to be, locked in this thing for a whole 20 years. But then, as you've mentioned, what we usually tell them is, yes, 20 years is a long time. However, this, first of all, it's an asset. I mean, real estate is long term, right? So you need to have like a long-term mindset. Secondly, what that 20 years does is that it enables you to be able to afford those monthly repayments, right?
That's true.
So then let's say, for example, if currently what you can afford is 50,000, and within that 20-year tenure is what your repayments of this 50,000 will be, then it does make sense for you to take that. And then obviously, as you progress, things may get better. And obviously, we usually tend to have like a positive outlook in life. So things do get better. And if you get to a point where now, let's say we talked about the lump sum that you may generate in between, let's say you get a bonus here, or you even get like a job promotion, then it still doesn't stop you from, making the lump sum. And then that 20 years can now drastically reduce to 15 or eventually even 10. So yes, don't shy away
That's
from
true.
the...
That's true, Christabel. And the reason why I'm saying that's true, it's because you find that a 20-year mortgage and a property valued for, say, 5 million today, in 20 years' time, it will not be.
It won't be 5 million.
It won't be
for
5
sure.
million.
Yes.
So there's that aspect of the property appreciation. So there's a time value of money.
Yes.
So you find that your returns, you'll be able to get a return on your investment within those 20 years. And then take those 20 years and pay within a short time.
Yeah. The other interesting thing we've seen is that, so when you're also having these discussions, so sometimes as Kenyans, we like to do direct math. So somebody has seen a property, probably repayments will be about 40,000, 50,000, let's say over a 15-year period. And then, so what they do direct math. They're like, okay, if I'm going to pay 40,000, then I do that by 12, then I do that by 15. At the end of it all, I'll have paid X amount. But the property itself, the price of the property is, let's say again, going back to the 8 million example. Okay, in this case, let's use 6 million because 6 million would be more of the 40. So to them, they're like, at the end of it all, if I would have paid, let's say 9 million as opposed to 6 million, they're like, that's too expensive. I can't do that. And we usually tell them, you have two options. The first one is if you're able to get started now and come in and then, now convert your rent, that's rent that you're paying at 40K, start paying that. Eventually, at some point, it'll end. The second option is you can continue. You have the capability to get started, but you can choose to continue paying rent. Either way, those 15 years will still lapse and you'll have paid that 9 point something that you're so scared to pay. So it's usually that analogy always fascinates me.
And the reason why, and I like that analogy, and sometimes how I challenge that analogy is because I may not have that 6 million today.
Yes.
I may not have the cash. So why don't I take advantage of the money that is available from the bank and then I work towards fast tracking my repayments? Yeah. So and we said that the 6 million today will not be 6 million in 10 years.
Yes.
Will not be 6 million in even in those 15 years or 20 years.
Yes.
And one thing that you'll notice, Christabel, is that property prices, they appreciate in between 3 to 4%. And if at all the property price is appreciating between 3 to 4%, then why don't I work with someone else's money?
Yes.
Yeah?
Yeah. Which is what the wealthy people do. So
exactly.
Okay. So even as we come towards the tail end of this, so somebody may say like, okay, I've consumed the information. I'd like to get started. They've probably gone on the platform, used our affordability calculator, and they've been paired and matched make with a couple of options. So, and they don't have a deposit because we have to acknowledge that raising that 10 or 20% may not necessarily be easy for most people. So we've seen that tends to be the biggest hurdle in terms of getting started. So does HFC provide 105% financing?
Christabel, first of all, for me, maybe what I can be able to highlight is that you find that the incidental costs to property ownership, they range in between 8 to 6%, less the deposit.
Yes.
So the moment we put in the deposit of 10%, then we're talking about in between 16 to 18%. And so since we're talking to 16 to 18%, then you find that it becomes a handle, or it becomes difficult for somebody to be able to get that money. So say, for instance, I'm buying a property for 10 million, or even you can be able to work with a property of say 5 million, supposed to be able to raise 500,000, as well as the incidental cost of like 400. That's you're supposed to raise in total like $1 million. So with that, I know it becomes a challenge. However, at HFC at the moment, we do not have the 105% product. But we encourage our customers, you're aiming to acquire that property for 5 million. You're aiming to buy that property for say even 10 million. At HFC, we offer accounts that are able to attract competitive interests.
Okay.
And you can be able to deposit your money, maybe as you plan yourself, say for a period of 1 year. Say you want to buy a property in 2025 or whichever year that you want to be able to buy a property, you can be able to be saving regularly, and that money earns interest. So we have like three accounts. We have a Nyumba Yangu account whereby you're able to save. We also have an account we call Fanaka that you're able to save, as well as a crossover. A crossover account is an account that helps you to cross over towards home ownership. And some of these accounts, they come in with some benefits that we're able to be able to take our customers through.
Okay.
Yeah.
So ideally, if somebody doesn't have that 10 or 20%, they can look into those products and just get started in terms of saving.
Exactly. And maybe even they could be buying a property off plan. That is maybe at ideation or conceptualization.
Yes.
So from that, then you're able to encourage the customers. Then as the developer breaks ground, even before the developer breaks ground and you are eyeing to buy that property, why don't you save?
Yes.
Yeah.
Yes.
And you earn interest. You're saving and you're earning interest.
Yeah. Okay. And obviously, because the development cycle tends to be on average anywhere between 24 to 30 months, obviously, if they start early within that period, then they would have raised enough deposit.
Exactly. And it costs for a little bit of sacrifice.
Yes. These are a bit of discomfort, but eventually you get there.
In the initial years, there's a discomfort. Even in the initial years of paying a mortgage, when you're paying more of interest less of the principal, there's a discomfort. But at the end of it all, there's light. You're able to see that at the end of it all, I'll be able to own this property.
Okay. Yeah. So now, finally, what advice would you give to a prospective home buyer who's watching this? Now, given that we have affordable home loans in the market, we have a number of affordable properties in the market, and let's say this is somebody who relatively earns on average 150,000, 200,000, and based on where they are at, they're actually able to get started. What sort of advice would you give that person? And maybe they're having cold feet. They've actually even used the calculator. They've seen properties. Maybe they've even gone for a site visit, or a bus tour, but they're having cold feet. They're like, is this thing for me? Maybe I'm still too young. What advice would you give to that person?
Excellent. That's a very good question. And maybe what I can be able to say is that the best time to be able to invest into a property, it's now.
Yes.
You don't have to wait for tomorrow, because as you say that as long as you wait for tomorrow, some of the costs of the property acquisition, it becomes high. So for me, what I can be able to say, Christabel, is we need to, one needs to be able to know that the best time to buy a property is now. Okay. There is also the time value of money. A property for 5 million today will not be 5 million in 20 years' time. So the best time to be able to get in it's now. And anytime you invest into a property, you find that there's so many pitfalls that come with that property ownership. It's critical for you to be able to do a due diligence. Yes. It's critical for you to be able to engage the service providers. It's critical to be able to engage a lawyer, valuer. If you're buying that land, engage a surveyor so as they can be able to tell you about the beaconing of a property. It's important to engage the service providers or the professionals. Let me just say professionals for you to be able to know that you're getting into the right deal. Yes. And then the other thing that I can be able to comment is on when buying a property, always I'll be able to say about three things. Location. Location is everything. Is it accessible to amenities? Is it accessible to services? Are you able to use public transport to the property? Yeah. Remember, you're getting in Maybe you might not be driving. Yes. Yeah. And I may say for me, maybe the best thing to be able to do is to buy a property before you buy a car. But preferences are different. Yes. Yeah. So I may say is that location is it's very critical before you get into that property. And your first property, it's a stepping stone to building your wealth. So don't shy away to be able to talk to us, to talk to Rentsco, talk to HFC, and we'll be able to support you in that homeownership journey.
Okay. Thank you so much. So for me, as a parting shot, what I usually say is, mine is very simple. Work with professionals along the way to guide you. So just like we've mentioned, from registered estate agents to valuers to, lawyers who the area of expertise is in conveyancing, because they are in that space and they understand the market. So they'd be able to effectively guide you.
And even the other thing, Christabel, just remembered is that at the initial or when you're getting into the property ownership, you might feel the pinch, but midway, you'll be able to relax.
Yes.
So don't shy away investing into that property because of the closing costs. And that's why banks exist to support you in that home ownership journey.
Okay. Thank you so much, Stella, for gracing us with your presence. I'm sure our audience will find the conversation valuable. And so if you have any questions or any comments, please just leave them on the comment section, and we'll be more than happy to answer them and guide you. So as always, visit rentsco.africa, use the affordability calculator, see what you can access, what your monthly repayments would look like, then get matched to the property within your affordability range. And then let's have a conversation in terms of getting started. Thank you.
Thank you, Christabel, for having me.
Yes.